Right now, most people scrolling past XRP headlines have no idea how close they are to missing something important. Not hype, not a guarantee, not a price prediction, but a shift in understanding. Because when it comes to XRP news, the biggest developments rarely announce themselves loudly. They move quietly, in documents, in meetings, in infrastructure decisions that don't trend on social media but shape the future anyway. If you've been watching XRP for a while, you already know how confusing the noise can be. One day it's optimism, the next day it's doubt. Headlines change, sentiment flips, and price moves without explanation. And that's exactly why this conversation matters. Because the real story of XRP isn't found in a single candle or a viral tweet. It's found in context. Let's slow everything down for a moment. XRP exists at the intersection of technology, finance, and regulation. That alone makes it different from most digital assets. While many cryptocurrencies are built around ideology or speculation, XRP was designed around a practical problem. How value moves across borders. That problem hasn't gone away. In fact, as global trade and digital payments grow, it's becoming more visible. Most people don't realize how outdated cross-border payments still are. Transfers can take days. Fees can stack up. Transparency is limited. And for institutions moving large amounts of money, inefficiency isn't just inconvenient. It's expensive. XRP was created to address that gap. Now here's where XRP news gets interesting. Progress in financial infrastructure doesn't look like progress on a chart. It looks like testing, compliance reviews, pilot programs, and regulatory dialogue. It looks boring, and boring doesn't trend, but boring is exactly what institutions want. In the United States especially, regulatory clarity determines whether a technology can scale. XRP has been forced into the regulatory spotlight more than almost any other digital asset. While that process slowed short-term momentum, it also created something rare in crypto: real legal scrutiny, real debate, and eventually clearer boundaries. That clarity matters more than hype ever could. When people ask why XRP hasn't moved the way they expected, they're usually asking the wrong question. The better question is whether the foundation has been getting stronger or weaker. And if you look beyond price, the answer becomes more nuanced. Another thing most people miss is how markets actually react to news. Price doesn't move because information exists. It moves because information changes positioning. If something is already expected, price often does nothing. If something surprises the market, reaction follows. That's why big news sometimes feels underwhelming, and small updates trigger sudden moves. XRP has lived through years of expectations, disappointments, and recalibration. That process filters out short-term speculation and leaves behind participants who are focused on long-term relevance. Now let's talk about perception. For a long time, XRP was framed as controversial. That framing stuck, but perception isn't static. As the broader crypto market matures, narratives evolve. Projects once dismissed start being reevaluated, not because they changed, but because the environment around them did. Institutional interest doesn't look like excitement, it looks like patience. It looks like waiting for risk to be defined. It looks like moving slowly and deliberately. That kind of behavior doesn't generate daily headlines, but it shapes outcomes over years. Another critical factor is liquidity. For any asset to function as a bridge, it needs depth. XRP has consistently maintained liquidity across multiple markets. That's not accidental, it's structural, and structure matters more than sentiment. Markets are not designed to reward understanding immediately. They're designed to test conviction. Volatility shakes out weak positioning. Uncertainty exposes emotional decision-making. This isn't unique to crypto, it's how markets have always worked. The mistake many people make is assuming that frustration means failure. In reality, frustration often appears when expectations don't match timelines. XRP's timeline has never been short. And that brings us to today, right now. XRP news feels quieter than it did during peak controversy. That silence can be uncomfortable, but silence doesn't mean inactivity. It often means the conversation has moved away from speculation and toward execution. Execution happens behind closed doors. As you watch this, remember this: price is a result, not a cause. It reflects outcomes, not effort, and outcomes take time. This is why short-term thinking struggles in long-term systems. If you're still here, take a second to like the video. It helps thoughtful content reach people who want understanding, not noise. And subscribe if you want more grounded conversations about XRP and the broader market without hype or fire. Because the real XRP story isn't about tomorrow. It's about whether a system designed for efficiency, speed, and scale still has a role in a changing financial world. And when you understand that the real story unfolds quietly, the way you look at XRP news begins to change. Instead of waiting for dramatic headlines or sudden price explosions, you start noticing patterns in behavior, in timing, and in how information is released. Financial systems don't announce transformation with fireworks. They signal it through consistency. One of the most overlooked aspects of XRP news is how rarely it focuses on speculation alone anymore. The conversation has shifted toward utility, infrastructure, and long-term positioning. That shift doesn't feel exciting to everyone, but it's meaningful. It suggests maturity, and maturity in financial technology is rare. Markets tend to reward maturity late, not early. Another important point most people miss is that regulation isn't just a barrier, it's also a filter. Many projects never survive regulatory scrutiny. They fade away, not because the technology failed, but because the structure couldn't adapt. XRP has already passed through one of the most intense periods of regulatory attention in the entire crypto space. That experience reshapes how institutions view risk. In the US especially, risk definition matters more than innovation speed. Banks and financial institutions are not chasing the next trend. They are protecting systems that move trillions of dollars. Any technology that integrates into that environment has to meet standards that most crypto projects never even attempt to meet. This is where XRP's design philosophy becomes relevant again. It wasn't built to replace everything overnight. It was built to connect systems, to reduce friction, and to operate quietly in the background. That's not a vision designed for headlines. It's a vision designed for longevity. XRP news also tends to be misunderstood because people expect immediate validation. They want confirmation through price. But price is a lagging indicator. It reacts after confidence shifts, not before. Confidence shifts slowly, through repeated signals, not single announcements. Another layer to this conversation is global coordination. Financial systems don't operate in isolation. What happens in one country influences decisions in another. XRP's presence in international discussions about payments means its relevance isn't tied to one jurisdiction's sentiment. This global nature makes the narrative harder to follow, but also harder to dismiss. Even when attention fades in one region, progress may be happening elsewhere, and by the time it becomes visible again, positioning has already changed. That's why timing feels unfair to many people. They notice movement only after it's underway, but markets don't reward awareness alone. They reward preparation. One of the most dangerous habits in crypto is comparing timelines. Every project moves differently. XRP's path has been shaped by forces that most other digital assets never faced. That doesn't make it better or worse. It makes it different. Understanding difference reduces frustration. Another thing worth mentioning is how emotional language affects perception. Words like pump, dump, moon, or collapse simplify complex systems into emotional extremes. They grab attention but distort understanding. XRP news today tends to avoid that language more than it used to. That's not an accident. It reflects a shift towards seriousness. Serious conversations don't go viral easily, but they build trust. Trust is slow to build and fast to lose. XRP's long public journey has tested trust repeatedly. Surviving that process changes how an asset is evaluated. It's no longer hypothetical. It's been stress tested. Stress tests matter. From a technical perspective, XRP's ability to move value quickly and cheaply hasn't changed. What has changed is the environment around it. Expectations are different. Standards are higher. Scrutiny is sharper. In that environment, resilience becomes an asset. Markets also go through phases of attention saturation. When everyone talks about something,